Hello, this is the TradeSite US Stocks Futures and Forex Market Preview for Wednesday the 15th of June 2022. To be honest, this is probably the last preview for the week. I do think there's a chance this is going to be a really interesting Fed meeting tomorrow. I don't know what else to say about that, but obviously this is a big one. Everybody thought they were be coming into half-point raise. Then there were some rumors about a three-quarter-point raise. And now guess what? We are potentially looking at a 1-point raise. I don't know if we go there, maybe it's 3/4 of the point. Maybe they're just trying to adjust expectations so 3/4 doesn't look bad. It's going to be really interesting, though, because we haven't, for the last, look, let's be honest, since 2005, 2004, interest rates were low. They got lower in the housing collapse in 2008. They started to tick up 10 years later, then COVID hit, and they went back down. There's an entire generation of this country that doesn't understand interest rates over 1% and mortgage rates over, let's just call it 3 or 4%. And I think mortgage rates are going back to like 7 or 8%, and we're on our way there anyways. And this might be the biggest meeting ever because I don't think anybody knows what the final answer is going to be on what they're going to do. So we will just have to watch and see what that looks like. I'm not going to put calls up tonight. I mean, there's nothing to do. If you're not short and you haven't been short this market, which we've been telling you to be, I don't know what else to say, right? There's nothing here. If they do a full point raise, is that going to be a negative, or is that going to be like a positive? Like, oh, they finally jumped in and everything's fine. There's no way to read that until it happens. Here's what I will tell you about the rest of the week. We got the Fed announcement tomorrow at 2 and the Fed meeting at 2:30. Usually we get a three-way phenomenon. We're in the middle of the options, triple expiration unraveling for options, futures, and commodities. That will end on Friday. Friday is typically a boring day. Wednesday is usually the unraveling, but again, that usually starts after the first hour, and everybody's going to be waiting for the Fed. We have now this really unusual thing I didn't even really realize, which is that Juneteenth is now a federal holiday, I guess. And so the stock market is closed on Monday. As you know, or as you should know if you've taken our course, the biggest risk to the market is always, like the biggest collapses occur over a major options expiration weekend. Triple expiration 4 times a year is one of those, but even a single options expiration third Friday weekend can be a lot of risk to the market because people don't have the puts in place to cover the downside. And so here we are going into a Fed meeting with a lot of uncertainty, no understanding of what they're looking at. Inflation is maybe not even controllable by the Fed because it's all about the war, the rising price of oil because of the war, and that includes inflation and rising food costs and everything to transport things around the country. It's not pretty, but what happens if you get a negative reaction on Wednesday and Thursday and you go into triple expiration Friday, but now you have a Monday, that's Juneteenth, whatever it is, on Monday, so you got a 3-day weekend. Who's going to want to be holding stocks with the market falling apart? If it is, I'm not saying it will be, but if it is, we're definitely poised for it. And if we get negative news, or if the market perceives the news as negative, who's going to want to be holding stocks going this weekend? So again, look, all I've said all year is I don't know why you would want to buy anything. I haven't held a single stock long overnight since 2021, and that was like 4 days in the second half of the year. There is no reason to be buying stocks if you understand the market. Doesn't mean we can't get a bounce. Doesn't mean that the market might not react favorably to a really big Fed rate hike. Seems weird, but maybe a lot of it's priced in. But here's the deal. We don't know, and the reality is the downside risk is way more there than the upside risk. And you've got a 3-day weekend, and you've got triple expiration, and you're going to have the least protection on the market possible over the weekend. So again, I continue to say the same thing I always say. Why would you own anything? Just stop. Make sure you're just short or flat and day trading. That's how you make money. We've made a lot of money. Whatever you've done, you've made money just by focusing on that. And I know there's been some really dead days. We had like 2 weeks, almost 9 trading days in a row where the market did nothing, starting 3 weeks ago. Okay, great. You can't do much in that. Like you're not supposed to. You can't do anything when the market sits dead flat for 9 days. But this is your chance. If you've been smart and you've not done much, and maybe you've been short with some options like we talk about and all these other things, but you haven't owned a stock overnight all year, you're in good shape. You should be in good shape. You've avoided a very major correction. If you're short, you still might make some more money. If you don't get long, you'll still be saved. And then we'll see what we get. And I don't know what else to say about that. That is the general rule. That's what I keep telling people. I have not changed my tune on that all year long. We're almost halfway through the year. I can tell you right now that 10% of my entire day trading stock trades have been long. 90% have been short all year. I have not run as many stock trades as I usually do. I've been doing a lot more futures. We've had a lot of option stuff. We made a lot of money in the VIX earlier in the year. If you're not short right now in the options market, then you missed the boat on what we're trying to accomplish. But this is not a time to we always tell people, losers catch a falling safe. And when I say losers, what I mean is the people that the safe lands on. That they never get back up, that they break their bodies, they're done. Right? Nobody should be asking about being long right now, especially overnight. I mean, I get it. If the market rallies, market direction goes green and you find a pattern, cool. But what we do here at TradeSight is not stupid stuff. That's how you continue to be successful with us, and there's nothing else to say about it. Here's the ES front month futures contract. This is the daily chart, the broad market in futures form. As you can see, we had a 13 buy signal back about almost a month ago now. We bounced off of that. It was a very mediocre bounce at best. Came back down. Now we're still above the risk line, so that signal has not yet played out. We'll see what that means. But right now we're at new lows and nothing pretty about it. Let's look at the cash indices. S&P was down 14 for the day. Again, this one has broken. Remember, this was the 13, the cash index. Got the 13, bounced right off that risk line, but now it's broken it, and we never got the culmination of that signal. We never got back to the green static trend line way up at 4,600. We never got a new 9-bar startup phase, and we've broken the risk line. That is a negative on the market under the rules of the secret Comer, and it's probably a stronger negative than any positive you can find out there. NASDAQ 100, oofta. So 13 sells buy signal, bounced a little, stayed above the risk line. Now we're playing with it. We haven't closed below it, but we're right there. Any more negative day, you're going to break that. And again, we don't have a counter signal on that, or we have not culminated that signal. SOX down, actually was up 16.89, but it's at the lows. Biotechs were up 5. Nobody cares about that because it's still at the lows. Russell 2000 down 6. Swept the lows of the year. Crude oil up at 119.12, up 19 cents. Not at the highs of the year at all. But close to it. I mean, close enough, within 10 points, $10. We'll see. I mean, obviously, when the war started, that was the biggest bump in oil prices. It's still holding up, and that's the bigger problem, the ongoing higher price of oil, not the one moment spike. Gold was up $2.40, but it's actually been down. This is the weird thing, right? So we're sitting where we were 9 months ago on gold. This is your inflationary index, and the problem is this. People that say, oh, there's all this inflation and blah, 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 blah. Yeah, there is inflation and there's price inflation. Why is it happening? Why are we getting the brand, right? So we had COVID, then we had supply chain issues. I don't think the Fed was wrong. Everybody can play Monday morning quarterback, and a lot of people do, and God bless them. I don't care about them because they're just useless, okay? I think everything else being equal, we were finally getting out of the mess with COVID. We printed a lot of money. I don't disagree with it, but when you print money, you're going to get inflation at some point in time, right? And it spiked the market well beyond, and I kept saying this all last year, well beyond normal valuations. And now we're coming back from that, but would have been maybe fine, except for the war. And now with the war, the supply chain issues get worse, the price of oil goes up, the cost of transportation is the price of oil, moving food and goods around the country gets more expensive. That's your inflation. Will a Fed interest rate hike solve for that type of inflation? Remember, this isn't just a booming economy. I mean, we are doing well, but it's not a booming economy inflation. It is a specific cost of oil inflation, right? So kind of what I think is if the Fed goes 3/4 or a full point tomorrow and then another half point in July, I think they're going to overshoot. I think they're going to shut this economy down. And nothing's going to change because the price of oil is not going to change because they're raising interest rates. That's my personal view. So that's where I think we're going. If they do that, we'll see what happens. But the thing is, what's your biggest sign of that? Gold. Gold's not even up. 9 months, gold's gone nowhere. If you have real price inflation, gold's up. Just saying. Advanced decline ratio on the NASDAQ, negative 632. Advanced decline ratio on the New York, negative 756. NASDAQ volume 4.8 billion shares. It's kind of light, actually. We didn't have a big day here. VIX closes down 1.33. But it's still, again, I keep saying this, by the way. Every major market decline needs the VIX to go over 40. We haven't had that yet. I've been saying it for months. So why would you want to? We're obviously in decline. We've obviously had issues. We have volatility numbers. Why would you want to buy stocks until the VIX gets over 40? I don't get it. Nobody that understands the market should ever want to do that. So again, stay away from the long side from that perspective. Trend closes at 0.97, puts the 10-day moving average at 1.46 because we got a super high reading the other day on the triple or on the futures roll. Apple sitting on the risk line, but it was up 88 cents. Amazon down $1.36. Remember, Amazon got that big split. So $1.36 now means a lot. Let's put Meta up here because that's the new thing, right? Meta. Facebook, Meta at new lows is what it is. Google up $6.46, but very near the lows. Goldman Sachs down 78 cents. Nothing pretty there. Netflix down $2.15. Ick. Almost new lows there. Peloton in the single digits, $9.58. I mean, do we even track that anymore? Is there a point? TLT, the 20-year bond ETF down $1.39. Bonds down, rates up. Let's go. Tesla up 15.46, trying to bounce off the lows. But again, this thing's also cut in half. Zoom up $3.54. Actually been doing better than most stocks, to be honest. Okay, Bitcoin sitting at 21,140 right now currently. We've got the Dow down 151 points, which seems, generally speaking, kind of minor. Here's a look at the ES futures contract, the 5-minute candles. So again, on Monday we gapped down and kind of drifted lower, even made it back almost to the highs midday, and then still drifted lower. Tuesday was worse, kind of a small gap up, a flat opening filled it. We're jerking around in the middle of that range, even for the day coming out of lunch. We did dip to new lows, but then we came back up and we closed slightly negative. So, it's not like it's been an exciting week because the biggest move of the week was the gap down on Monday. And there's nothing else to say about that. All right, so we will see what we get. We got the Fed and everything else. Charts as usual. Brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading rest of your week.